we are going to talk about Metropolitan Museum of Art today. It is my name is Zauzi, and the Metropolitan Museum of Art, aka the Met, is a not-for-profit cultural institution founded on April 13, 1870. It's dedicated to its mission statement, which is Metropolitan Museum of Art collects, studies, conserves, and presents significant artworks of all times and cultures with intent to connect people to creativity, knowledge, and ideas. Throughout its history, the Met has developed based on its essential values of excellence, inspirations, integrity, and accessibility. The Met files annual report each year, and the report is issued each year in November. It covers the period from July 1st of each year through June 30th of the following year, coinciding with the museum's fiscal year. And the report consists of three narrative reports: a drawn narrative by the director and the president detailing significant events, a report on finance, also, and which we will talk about today, and a summary of educational activities. Also include a list of the year's art acquisitions, exhibitions, publications, awarded fellowships, loans, and supporters. In the report on finance, the Met, as a not-for-profit organization, discloses artworks in accordance to governmental-wide financial statement, including one statement of financial position. It's different from the one mentioned on the book, but it's the same thing, just name different. Statement of activities, statement of cash flow. Alongside the financial statements, there will be also notes summarizing the accounting policies, specifying all the assets, liabilities, expenses, and so on. Thank you. And now I'm passing it to Emily.
So I'm going to talk about the non-for-profit entity accounting. Some non-for-profits are governmental because they are controlled by the government and they receive tax revenue from them. However, most of the non-for-profit entities are private, non-governmental. So the characteristic of the non-for-profit entities are they often receive large amount of contribute resource from provider, not expecting any return. And their operating mission does not have any concern with profit, and there's lack of ownership interest like for-profit entity. So major source of support for most private non-for-profits are contribution, which are unconditional transfer of cash or other resource in voluntary non-reciprocal transaction and should recognize as support in current period at its fair value. So the donor of restricted contributions specifies how to use the money. And contributions are recognized as temporarily restricted net assets or permanently restricted net assets when promises are received. Conditional promises are not recognized until conditions are met. So accounting for artwork. Artwork in the museum account different from other donated property because they create no direct increase in the cash flow. And oftentimes, these artwork require continued outflow of cash for different expenses. Donation of artwork and historical treasure are generally not recognized. Disclosure, but no formal recognitions. So if the following requirements are met. First one, add to a collection for public exhibitions, education or research. Second, protect it and preserve it. Third, covered by organization policy where proceeds generated by the sales are used to buy other collection, so they don't serve as any type of investment. So here is our example for the journal entry. So in this example, donor A give $100,000 in cash to non-for-profit entity M that must be conveyed to non-for-profit Z. So the first journal entry shows that when the donor A relinquished the control, they have to record the expense and the decrease in cash. The second journal entry shows that the donor A retains the power, the access to the money, so they have to record fundable advance to non-for-profit M and reduce the cash.
Hi, I'm Andy. So I'm going to actually continue off from what Emily was talking about. So these three different journal entries, this is the middle person. So when it comes to the first journal entry, when the original donor actually relinquished their control for the donation, so the way the middle person would record, the non-for-profit middle person would record is that they record it as receiving as cash as debit of $10,000, and then actually have a liability to another non-for-profit entity for another $10,000. So that's for scenario one. Scenario two is when the original donor actually retains the control over the gift. So what happens is that they record it as cash for $10,000, and then they have recorded the credit as refundable advance from donor A with $10,000. And last but not least is that when the donor actually gives the money but actually has a restriction. So this is usually recorded as cash for $10,000 and temporary restricted net assets contribution for $10,000. So for this part, there actually is a restriction applied. Unless the restriction has been met, then the person that received the donation can actually use it. So this is actually for a non-for-profit Z, this is the very last person that actually received the contribution. So once they get the contribution, they actually record it as contribution receivable. For $10,000, this is actually money that was promised to them, but it actually hasn't been given to them yet. And then actually balance it off with the unrestricted net asset contribution as a credit. Okay, so now I'm going to talk about different transaction when it comes to artwork. So the first one I'm just going to explain is donated artwork. So for donated artwork, as Emily said before, we actually have, for all the donations of artwork and historical treasures are generally not recorded, but disclosure is required. So as you can see on the right-hand side, there's an image of one of the artwork for the Met Museum. So what happens is that when they record it, they actually have to categorize it first as depending on the artwork. So for this one, it says Asian art. It could also be Latino art, European art, or African American art. So then after that, they actually will categorize it if it's actually a gift, or it could be a purchase. So it really depends on the nature of the artwork. So the way they record it is that they actually record it as the author's name, the origin, the name of the artwork, a little description of the artwork, and then the time period where the artwork is actually created, and then the 2014 is actually the year that the artwork was received by the museum, and it's actually followed by a dot with a whole bunch of characters to actually categorize the artwork. And lastly, you also list the name of the donor or the company that donates the artwork. Alright, so the next transaction for artwork is actually purchase of artwork. So when they purchase artwork, they actually record it as purchase of art, and there's a little notation, note D. So for this one, it's actually in the unrestricted category, and from note D, I also copy the note D and actually paste it down here. As you can see, the total for the unrestricted part actually equals to the exact same amount down here. So then they actually give you a little breakdown of what the artwork is, what funds it is to use for artwork. So the first fund is actually the gifts of cash and securities, which is usually donation from the donors, and then the gains and income from long-term investment that the museum actually makes. Lastly is that they also have another fund from actually selling artwork or insurance proceeds from the previous artwork. Lastly is the sell artwork. So the sell artwork means deaccessioning. So the term deaccession means that a work is removed from the collection and considered for disposal by sale, exchange, or other means. So when sale, usually they sell through the auction house, or when it comes to exchange, they exchange it from one museum, artwork from one museum, to another artwork from another museum, and then they just exchange it on premises. Lastly, but other means is also meaning that they actually would donate the artwork into let's say, a research institution, or they actually give it to a college to actually for further studies. So there's actually 2 steps for the accession. Step 1 is the artwork must be appraised. So the artwork has to be appraised by curators or appraisers. So this way, when they actually sell or exchange or do other means for the artwork, they actually have to know roughly about the value. So when they actually appraise it, so this way the auction house will know a minimum price to actually auction the item. If they exchange it, the item can actually be very valuable depending on the exhibit. And lastly, for other means, they actually, just in case when they donate the artwork and the artwork gets damaged, then we actually would know how much it costs for them to repay it back. Then after they appraise it, then they will sell it, exchange it, or gift the artwork. As the bottom, sorry for it being cut off, but when they actually sell the artwork, there is a way to record it, which is the proceeds from sale of artwork, which is in the temporary restricted category. The reason why it's temporary restricted, because according to the museum's policy, is that any proceeds from selling from artwork can only be used to buy other artwork. Alright, so an overview of recording of artwork. So when you purchase artwork recorded, when you purchase artwork, you actually record it using historical costs, and you have to disclose the artwork. So on the day of the acquisition of the artwork, it's actually fair market value. Any day after that would be historical costs. Next is the donated artwork is generally recognized but not disclosed. And then also when selling artwork, you actually have to record it as underneath the proceeds from the sale of artwork, and it's minus the cost. Lastly, this is one of the little discretions about artwork, that artwork is not recorded as an asset. If it's recorded as an asset, it would be reported as a long-term asset, which actually, with long-term assets, we all know is subject to depreciation. And we know that artwork is priceless. Since it's priceless, then it's actually appreciate in value. So so it actually conflicts with each other, showing that you cannot depreciate something and also appreciate something on the same time. So to be on the safe side, we actually do not record it as an asset. So next, I'll introduce Anna, and she will talk to you about tax exemptions. Anna?
Okay, so I'm going to talk about tax exemption. Almost all the nonprofit organizations can apply for the tax exemption. In order to have the tax exemption, they need to file Form 990. This is file Form 990. This is for Metropolitan Museum. And usually they have three main tax exemption status. I'm going to talk about the last 2 first. The section 501c4. This one is for the social welfare organizations. And the last one, C6. This is for the commerce-related organizations and the professional football leagues. And the first one, this is the most common one. Almost over 70% organizations use this, and which is including the Metropolitan Museum. And this is so what is the benefit of this status? First, they don't need to pay the federal income tax, and in most cases, they don't need to pay the state income tax. This is from the first page of the Form 990. We can see that the Met Museum, they have the $52 million income per year. So they apply for this status and they save a lot of money. And they have another benefit, which is that the donations to this kind of organizations, they can reduce from the donor's taxable income. And another one is sometimes they can apply for the postal permit, so they can reduce the mailing charges. But however, they still have some restrictions. Is that those organizations, they cannot participate in the political election campaign activities. So I'm going to introduce Lima.
Okay.
And
Thank you. Next, yes. Statement of activities falls under government-wide and many type activities. It basically reports the revenue and expense as well as other changes in net assets such as unrestricted, temporarily restricted, and permanently restricted for the period. The way revenue and expense is calculated is to applying the accrual method, accrual basis of accounting. Next. As you can see, the statement is made such a way that it presents a change in the net
net asset for the period. A primary purpose of the statement of activity is to provide a clear picture of those donations and any restriction that might have been attached. Metropolitan Museum in 2015 reports 308,605 for unrestricted, 2,055 from temporarily restricted, and 14,237 from permanently restricted. To clarify the above statement more, I would say the temporarily restricted amount from gift and grants is now unrestricted. Basically, because it meets the 3 requirements. Next, money, because the money was appropriately expended for an expense as designated by donor. Money was appropriately expended for an asset as designated by donor. Donor restriction based on time was satisfied. So I will give it to Alan.
Hello. So here I am to talk to you about the statement of financial position. The statement of financial position is essentially the same as a not-for-profit entity's balance sheet. Financial position. The statement of financial position is the not-for-profit's balance sheet. Basically, what's referred onto for profit companies as a balance sheet is known as financial position sheet statement. It's important to know that the equity accounts are non-existent in a not-for-profit, and that is because no one really has a claim to the ownership, because there's nobody who's owning this entity with the purpose of amassing profits and allocating them back to their equity accounts. So there's no such thing. So instead, what we have is net assets, and it simply refers to just that. Net assets, what are they? If you recall the original accounting equation, it is assets equal liabilities and owner's equity. So net assets are the assets that are in excess of liabilities. That's what's known as net assets. And it is important to note there are 3 categories of net assets, and these are classified specifically by the donors, whether something might be unrestricted, temporarily restricted, or permanently restricted. Any net assets that are donated, any assets in general, they will be allocated amongst any one of these 3 categories. So what exactly are unrestricted net assets? They are also known as board designated because they are internally restricted. That means management for the not-for-profit decides to allocate it for a certain resource, but it essentially is not restricted. So that's why it's really called as unrestricted, because even though it's restricted internally, it's almost saying that we will have about $5,000, and management says we will use this on our utilities. But it's not really restricted because the donors that gave us this amount decided to tell us what to do with it. Also, temporarily restricted net assets. They are designated by an external party for a specific use or for future use. Say, for example, a donor might tell us, here you go, here are, let's say, something that's worth $5,000, and they will tell us, do not use it until next year. Or they might say, use it, but use it for this, use it for your salaries. And then management has to follow that. Permanently restricted net assets. They are restricted by the external party for an indefinite amount of time, and that usually translates to for the entire life of the not-for-profit. But there is a common exception, and the exception to that would be that the principal of these net assets is not allowed to be utilized, but any income that is generated by these permanently restricted net assets can be utilized, which is also why they're regarded to as donor-restricted endowment funds. What are some examples of unrestricted net assets in the Met? For example, that would be plant and equipment that has been funded by temporarily restricted net assets. Again, the example, let's say we get something that's worth, or money that's worth $5,000, and they will tell us, please utilize it on this equipment. So That would be an example of that. Another would be net assets that are utilized for long-term investments, as well as unrealized appreciation on permanently restricted net assets. Some examples of temporarily restricted net assets would be investment income, as well as gains or losses on permanently restricted net assets. What are some examples of permanently restricted net assets? That would essentially be anything that was given with instructions not to use by the donor, which is an external party, a third party. If they give us a certain amount of something or something that's worth a certain amount of value, they tell us not to use it, then this is considered regarded to and falls into the permanently restricted net assets. So we're going to look at an example of the Met's financial statements. These are consolidated, and these are from year to year. These are comparative, 2014 to 2015. If you look down here, you will notice there is a bracket right here that I've highlighted for you to see. This is how the net assets are broken down by category within the financial position statement. We have them classified as unrestricted, temporarily restricted, and permanently restricted. So let's look at this a little more in depth. So this is what it looks like when you zoom in on it. So from this, we can deduce, for example, that unrestricted between 2014 on the right-hand side to 2015 on the left-hand side, it's been 57% about unrestricted net assets ready to use, and at 73K more than 2014. That means we have the majority of our net assets are used. There are no restrictions on how to use them. About a quarter of our net assets are temporarily restricted, which means we have to await further instructions from the donor, or we have to wait a certain amount of time before we can use it. And about another quarter of the assets cannot be used, which again means they are permanently restricted. The donor gave us express instructions, do not use this at all by any means. Again, going back to the statement, I'm sorry, not statement of financial position, but a statement of change in net assets, which is essentially the equivalent to a for-profit statement of equity. You will see again that this is the final breakdown of the net assets based on category. So again, if you see something over here that says unrestricted net assets, keep in mind to use at your own discretion, at management's discretion. If you see temporarily restricted net assets, it either means either used at a specific time or used with a specific purpose that was designated by the donor. Permanently restricted net assets are not to be used at all, but the exception is to use the income that is generated by these permanent assets, which is usually the exception to this case. But the principle must not be used at any point. And now I am going to pass it on to Anam.
Thank you, Ellen. Hi, this is Anam. I'm going to present the statement of cash flow. So the treatment of statement of cash flow for museum is actually similar to the for-profit organizations, even though museums we know are non-profit organizations. They actually calculate their cash flow from operating, investing, and financing activities, just like for-profit organizations, and they calculate end of the year cash. Those cash flow statements actually include necessary supplemental information and notes also. It's the same case for museums also. So here is a statement of cash flow. I think it's not that clear, but I'm just mentioning you in the beginning when we see the financing activity, we see that there is depreciation. So this depreciation, just to mention that it stands for all other assets the museum has other than the artworks they have. What's the next one? So a different method of calculating net value created. Nowadays it's popular. What museums do is they calculate the opportunity cost of people's time. People who are coming to see the art engagement, they calculate that amount and they compare with the net value created for that year. If they see the net value created is higher, that means everything is going okay. But if they see it's lower than the opportunity cost, that means less people are coming to to the museum, and they're not generating enough money. So they have to fix something. So it's basically the same thing. I just gave an example. You can see it from here. So some considerations museums make while they value their artwork. I just mentioned 4 common ones. The market demand, liquidity, valuation, and research data. Those are the 4 common ones. So the market demand is actually, when they value the artwork, they look at the market demand. If it is a very demandable product, they actually put more effort on it and they value it higher. And the liquidity, valuation, and research data, those actually what they do is they collect the data from a lot of auction houses, and they evaluate everything and they value it. One more thing I'll mention before I finish. There is a term called SCFE, which stands for the Association of Certified Fraud Examiners. Those fraud examiners, they actually have a museum where they exhibit frauds committed by different organizations, and accounting also is included there. So we have a museum that show the accounting frauds also. So that was it. That was our presentation. So hopefully you guys enjoyed it. Thank you. If you have any question, here you can't question us, but thank you for listening to us. All right. Good night.